as we all know, over the past few decades, public-private development has really been used by cities and regions across the world as an effective tool in balancing financial feasibility and public interest and priorities. So Veronica, who's a recent graduate of the MAED program and now splits her time between Boston and her venture back home in Peru, shares us with us a compelling case study looking at the difference between the Bonifacio global city in Manila, Philippines, which redeveloped a decommissioned military base into a bustling central business district. So joining Veronica will be Jackson T. Anderson and Michael J. Seiler. So Jackson is a real estate and economic researcher, while Michael is a professor of real estate at William & Mary, and who over the past year has been a visiting scholar at the GSD. The discussion will be moderated by Diana, editor for the article and a current student in the MLA program. Thank you.
Thank you, George and Lucy. With that, I'd like to turn it over to Veronica for her presentation. Thank you.
Hello, everyone. Thank you for such wonderful introduction and for hosting this amazing virtual space. So I would like to just share a little bit of the article that I wrote. Can we go to the next slide? It's based on public and private city making in the case of Bonifacio Global City, Manila, the Philippines. And just first starting as an overview of the project's plus 20 years lifespan of life and its complex macroeconomic context, we see that it kickstarted in 1996 and had great growth projections and population bonus, but went through 2 financial crises and 2 different private parties. Nonetheless, the steady demographic growth was real and kept increasing demand, as we see in the curve, and housing supply was on demand and urban infrastructure. On the other hand, in the next slide, we see that after the country's independence, there was an opportunity of redeveloping the former US bases. The land on top of it was available, and the former Fort Bonifacio, with a prime location near Metro Manila, came across as a very good opportunity to leverage its position, to increase the stock of the housing and commercial stock, and also provide public infrastructure. So in the next slide, we see that having land and having it could invite a private sector into come with capital and expertise to enter a collaborative mechanism and to unite both parties to jointly bear risk and also share the high returns of the BGC development. Also, in the next slide, I want to mention that what was most innovative about this PPP was the deal structure and how the asset was framed as a 3-dimensional object. Not only the value was not only assessed on the land, but also the potential revenue and how much you can build on top of it. Therefore, the calculation estimated 100% shares, which allow the public sector to bid and redeem 55% of them into $1.6 billion, while still retaining control over the asset and the venture. Finally, being able to have both parties in the decision making in the next slide, see that it allowed them to take account of the importance of the built form and the zoning regulation, adjusting them to the market needs since we went to different crises, and being able to be flexible about the lot size, the form, the density, and the use, allow them to maximize returns out of the land development, but most important, provide adequate infrastructure, placemaking, and livability to the dwellers of BGC. The next slides will just show some pictures of what is BGC today, when they're recently this year, and thank you so much. I think I will hand it over to Michael. Sorry, I was nervous, and Jackson, if they have any questions about this or maybe any thoughts about it.
Sure, let's start with Jackson.
Oh yeah, so hello, I'm Jackson. And I just kind of want to start it off by discussing that one of the things I found particularly interesting about this is that navigating these public-private partnerships is really hard. You know, roughly half of all of them fail. And I was just going to wonder if you could speak more to how the particular deal structure helped set this project up for success while so many just fail to reach their potential?
That's a great question, Jackson. Thank you so much. As you mentioned, it's true, half of the PPPs fail. And I think what was interesting about this was that the deal structure built the land as a three-dimensional form rather than just seeing as land. And it had three of the components that I think are most important, which is basically having this very strong public entity that acted as a quasi-private agency, having a very interesting valuation mechanism, and three, having human capital. The first one, we are saying that having this strong public agency leverage the ownership of the asset, of the location, and it enabled it to have the capacity to negotiate and land trading and attract the private sector and expertise. But the valuation mechanism, the second one, had a creative way to assign value and at the same time assess, being flexible about how are the different components of it that could be adjusted when there's crisis, as it is the lot form, the location, the zoning, the use. So I think having those mechanisms and having the human capital, the financial, technical, and regulatory capacity to be flexible about those components made it a huge difference from other PPPs that we see that are mostly structured out of debt. And that would be my answer, I think, to the question. What are your thoughts, Michael?
Well, before I jump into those, great article, obviously, and I want to thank everyone for putting the article together, not just Dixie and George, but also the professors there at Harvard, both Rick and Bing, and others who put together a wonderful program. So what you're doing there is certainly world class, and I'm happy to be a part of it, very honored to be a part of it. One of the things that I research a lot is land aggregation and how difficult it is to assemble something this large. And so not just with the PPP, but also I'm just wondering, with all of the things to come together, you have the displacement of a local community there. It also involves low-income housing. Putting together a mega deal like this, what exactly was it about the area that allowed it to come together? Maybe financing-wise?
I think it's an interesting question because it was a very ambitious. We are talking about over 1,600 acres of land, but I think it's one of the important things here was just having the target on the goal, which was the vision to provide supply, enough housing supply, and these other components at the same time. So I think having the capacity to oversee these different disciplines at the same time and being able to aggregate actors so that they could be brought into the table to negotiate the different trade-offs, I think made it very interesting. And since there was this, the core of it was that the public sector needed to provide more housing, needed to provide more infrastructure. So the idea was to still have a social impact, but maybe the vehicle to accomplish this was a little bit more creative using the market tools and the private sector. And I would say that could be some of the ideas about it.
So I'd like to jump in and just ask one more question, if you don't mind, about how did the BCDA, which was the public agency leading this venture, reallocate all the receiving funds? Because it was quite a huge return they were able to get on the investment.
Yes, that's a great thing about this project was the fact that since they bid for 55% of their preferred shares at the beginning, they got a lump sum at the front of the project, which allowed them to fund all their conversion of other former U.S. bases, also finish construction of military camps in the Philippines, benefit other Metro Manila communities, support different programs for homeless population. So I think, as I was mentioning in the other question as well, there was a vision and a goal for public wealth, for public benefit. And I think being able to reallocate resources in a smart way for the best of their ability for the dwellers and citizens was a good one.
I know we're getting close on time, but Veronica, could I ask you one last question? We're trying to turn this back to current events, and so while all the papers were written, pre-COVID, I'm just curious, with any type of layout, any type of city planning that you folks are doing, what is it going to look like in terms of not just social distancing in offices, which we heard in an earlier conversation today, but how about with things like hospitals and so forth? Can you speak to maybe how designs moving forward will have to work and how they might look with a PPP mentality?
Okay, I will be very cautious about the answer because it will depend on specific conditions of geography and the jurisdiction of each of these kind of deals. However, if I have to assume what is going to happen as a personal opinion in terms of the new PPPs in similar terms, I would say that the calculations of effective real estate that you can actually build, it will be significantly discounted. Normally, when we have a property, we discount it not just in terms of FIR, but in efficiency in terms of circulation. And since now social distancing is requiring us to have a larger space from each other, we will probably have a lower effective area, and probably will be requiring other different variables such as different components within the urban structures to be able to provide these sanitary conditions to all people well-being, the separation. But at the same time, I think it will be a very interesting challenge how to at least look at a creative way to finance those kind of developments, because right now we're seeing that in the market, there's a lot of very good leverage deals, like very good debt opportunities and bonds that are issued at very minimal interest rates, that maybe their way to tap on those opportunities to improve this economic development and these layouts and this creation of both finances and city building together. But those are just some ideas about maybe what the future holds for city planning in terms of PPPs.
That's great. Yeah, we really enjoyed your article and we wish you well.
Thank you both. It was very nice to hear from you.